Hello, I'm Mark Fleming, the Chief Economist at CoreLogic, and welcome to our Summer 2014 Housing Update. One of the biggest issues that we're finding today in the housing recovery is a perception of a lack of housing demand, and that is not enough people buying homes. And there are a number of reasons purported for it. Is it because of a high student loan debt burden? Is it because of a lack of affordability? Is it because investors are no longer active in the marketplace? There are many, many reasons. But we'll really break out the home sales data here to talk about what segments of the market are not growing. In this slide, you can see that existing home sales on a year-over-year basis are broken out into three categories. This is resales, that is home sales of people of healthy assets, and distress sales, REO and short sales. And here on the year-over-year basis, you can see that resales are basically flat. About the same number of people are selling their homes this year as last year that aren't in distress. The big difference in the driving force behind the lower growth rate in total sales is the REO and short sales segment. Those two are both off significantly, in large part because the shadow inventory today is becoming more and more concentrated in judicial states and therefore is having a harder time coming to market. This is also the primary segment of homes that would be the place where first-time home buyers and institutional investors might be involved in buying. So let's talk about institutional investors for a second. Institutional investment, we have to understand, is not necessarily a bad thing, and in fact wasn't even a dominant component of home sales, even at its best. In this slide you see the overall share of home sales to an institutional investor who we classify as somebody who buys more than 10 homes in a year in a market. The collective group of institutional investors made up somewhere on the order of at most about 250,000 housing units acquired. You have to compare that to a run rate of home sales of somewhere around 5 million. So over the long run, a very, very small share. And you can see here that that acquisition phase actually peaked probably around a year to a year and a half ago and has significantly declined since then. Institutional investors are no longer buying those distressed assets that I was talking about and the volume or pace of before. So this is a segment of demand that was there last year that is no longer necessarily there. The housing market is now being sustained more and more by its own intrinsic supply and demand dynamics. Those institutional investors, of course, were buying a lot of homes with cash. And in this slide, you can see the cash sales shares by state. While overall cash sales shares are highly elevated, the actual norm from the early 2000s and late 1990s is somewhere around 25% of home sales. It's elevated today at a national level of about 36% and is slowly declining from a peak of 41%. But when you break it out by state, you can see some very, very big differences. In fact, markets like Florida and New York have very, very high concentrations of cash sales shares. And that's actually because the types of homes that are being bought with cash are most likely to be condominiums. And you think about markets like Miami and New York and Florida and in New York State as having high condominium concentrations. In fact, the condo share of sales in Miami is well over 40%, whereas the national average is only 12%. And many of those condominiums, as you see in this slide, are being bought with cash. It's the most popular form of cash sales financing is in the condominium market. This is also in part driven by foreign investors. Foreign investors are coming into these gateway cities like Miami, New York, and Los Angeles and buying up homes such as condos. Now, I think there's a conventional wisdom that many might think that Chinese foreign buyers are the dominant class, but it's actually not the case. A recent NAR survey shows that the most likely or most common country for a foreign investor is the one to our north. It's Canada. And where do these Canadians like to buy? They like to buy condos in Florida, just like we do when we live in the Northeast when it gets cold. That's an attractive market for them. They're also more likely to be cash buyers as foreign investors as well. Once again, thanks for tuning in to CoreLogic's Housing Update. For more information, go to the Insights area of CoreLogic.com for our research blog and other housing statistics.